Good morning, and welcome to the Leap Podcast, your concise, level-headed crypto market update from Leap Digital Investments. I'm Patrick Penn. It's Friday, the 21st of April, 2026. Fresh off a week of cautious optimism amid ongoing geopolitical developments, the crypto market has shown continued resilience with a steady recovery and positive momentum across major assets. The fragile US-Iran ceasefire, originally announced on the 7th of April and now extended indefinitely by President Trump earlier this week, has helped sustain risk-on sentiment. This has allowed BTC, ETH, and Sol to build on prior gains despite lingering tensions. Let's leap in. A key driver remains the de-escalation of the Strait of Hormuz following the ceasefire extension. Although limited shipping has resumed under restrictions, the pause has unwound much of the acute risk premium that spiked earlier in the month. This macro relief, alongside strong institutional inflows, supported another week of gains. Bitcoin is trading around $78,343, up 4.5% week over week. Strong US spot Bitcoin ETF inflows reportedly exceeded $1 billion last week. Institutional accumulation has been notable, with MicroStrategy reporting the addition of over 34,000 BTC, driving Bitcoin past the $76,000 support level and into the mid-78,000 range. However, lingering macro headwinds and geopolitical tensions continue to create intermittent volatility. Ethereum sits at $2,337, up a modest 0.4% on the week. ETH has lagged BTC amid a shift in focus towards Bitcoin dominance. Solana holds at $86.20, up 3.5% week over week. Solana ETFs recorded 5 straight weeks of positive inflows, while monthly stablecoin volume reached approximately $650 billion. Solana highlights growing payments utility, with major integrations from Visa, PayPal, and Stripe. Real-world asset activity has increased and developer growth appears to remain strong. The total market cap advanced on BTC-led ETF inflows and institutional rotation, with sentiment showing signs of improvement amid recovering prices and declining exchange supply. The Fear and Greed Index now sits in a neutral to greedy territory. Positive tailwinds include growing real-world adoption narratives. Bitcoin continues to serve as a settlement layer in tense regions, with examples of use in cross-border transactions during periods of disruptions. This week, the S&P 500 continued to push fresh all-time highs, yet Bitcoin has remained in a relatively tight range after its recent surge, testing resistance without a clean breakout. This kind of decoupling has shown up repeatedly in past cycles. Crypto can consolidate or even pull back while equities run on different fundamentals, such as AI optimism to corporate earnings. It's a reminder that Bitcoin doesn't always move in perfect lockstep with traditional risk assets. Second, we appear to be entering a potential consolidation phase, with a possible low or reversal window forming in late April to early May, depending on how price action develops. After the recent relief rally off the ceasefire news and ETF inflows, the market is showing signs of exhaustion at key resistance levels. This isn't panic territory. It's the normal digestion that follows sharp counter-trend moves. Potential catalysts in the coming weeks could accelerate or delay the move. The Federal Reserve's FOMC meeting on April 29th and the Bank of Japan's policy decision on April 28th. Any surprises on rates, liquidity signals, or yen carry trade dynamics could act as a trigger for broader risk asset repricing. In summary, geopolitics driven volatility has given way to relief driven rebound, supported by institutional inflows and real world utility narratives. Crypto increasingly being discussed as an alternative asset in uncertain times. If de escalation continues and market conditions remain stable, we could see further continuation of the current trend. Remain calm and stay informed. That concludes your market update for the 21st of April 2026. Check YouTube and Spotify links for more information. Thank you for listening to the Leap Podcast.